the big event that is we have just surpassed, and that's the RBI monetary policy. And this time, as expected, the governor and the MPC has decided to keep the repo rate or the policy rate unchanged at 6.5%. But a big revisions being made on the CPI inflation data as well as the GDP forecast, because for the full year of FY25, the GDP forecast has been revised downwards to 6.6% versus 7.2% earlier, while the CPI inflation has now projected at 4.2% versus 4.5% for the full year of FY25. But indeed, a liquidity push is definitely given by the RBI, and hence you can see that on the back of the CRR cut of 50 basis points, both the benchmark indices have seen a sharp revision in terms of the kind of move from the day's lowest point, because the CRR is now cut to 4% from 4.5% earlier. That's indeed is expected to give push to the banking space. More than 1 lakh crores of liquidity push is done, and all these banking names from the private sector bank and some of the PSU banks are expected to benefit from the same. RBI governor also highlights that the high frequency indicator suggests slowdown in the domestic economy have bottomed down in Q2, and it is since recovered, aided by the festive season sales as well. So some bit of negative, but more of a positive seems like, because the kind of liquidity push that has been given is being taken positively by the market participants as well. But with this, let's also have a quick look on the kind of movement that we are seeing on the benchmark indices. Though for the Nifty 50, we are trading just flat right now, but when we look at the banking index, that's seeing a gain of almost 200 points when it comes to the Nifty bank index. But Cheryl, what are some of your key takeaways?
Absolutely. One of the key takeaways has to be the fact that, yes, we've seen that downtick come in on the growth in Q2. And from there on, what the RBI governor is saying, that looks like the Q2 GDP growth was marked the bottom of that sort of movement. But we have Mr. Keki Mistry also joining us on the phone line right now to talk on the RBI policy. And in fact, very good morning to you, Mistry, sir. Thank you so much for joining us in ET Now. And firstly, yes, no doubt on the headline number, there is no change, but there are a lot of headlines coming in from this MPC meeting. You have the CRR that's been cut by about 50 basis points, and that's going to help the banking industry, isn't it?
Absolutely. I think this is, in my view, absolutely the right move. Reducing interest rates by itself, again, in my opinion, would not have served the purpose, because when you reduce interest rates, straight away the cost of funds of banks do not come down. Lending rates get revised faster, and that creates some kind of a margin pressure for the banks. So by releasing liquidity in the system, by reducing the CRR by this 50-odd basis points, it effectively triggers in about 1.16 trillion rupees of money into the system, which would be enormously beneficial for the lenders. And ultimately, if the cost of funds of the lenders comes down, then obviously that benefit will be passed on to the consumers without impacting the NIMs, without impacting the margins of the banks.
Also, one of the key takeaways has to be the fact that everyone was talking about the GDP growth, the fact that it is not going on par with what the expectations were. And today you had the RBI actually go ahead and cut the GDP forecast to about 6.6% from 7.2%, what they had forecasted earlier. Do you think this is the right move coming in? And do you also see that we will now be able to surpass those levels of 6.6% of the growth? Because the RBI governor is of the view that now the things will improve going into Q3 onwards.
I think so. I absolutely think so. If you look at demand for goods during the festival season, if you look at the month of November, if you look at the very few days that have happened in December, growth clearly seems to have picked up everywhere. Whether you're looking at consumption, you're looking at the retail sector, you're looking at shops, you talk to people, you get the sense that there is a revival. And definitely there is a revival in the rural economy. So a combination of an improvement in the rural economy plus a pickup in the urban economy, I think will definitely drive the growth much higher. In my personal opinion, the GDP growth will be somewhere in the high sixes range, 6.7, 6.8 is my sense. To RBI's estimate is about 6.6.
All right. Hi. Good morning, Keki sir. This is Shrishti also joining in. But the RBI governor is also saying that the high frequency indicators have those were suggested slowdown have actually bottomed down in Q2, and there was indeed a push coming in from the festive season as well. How much you agree with this statement, and given the kind of cut that we have seen in the GDP numbers and the forecast there, do you believe that it is in a range that can be easily digested at this point in time, connecting the kind of indicators that we have?
I definitely think so. I think the indicators that we are getting now are have clearly shown an improvement in November, and as I said, whatever little time we've seen in December, and possibly even from the second half of October. So the worst clearly seems to be behind us. Whether you're looking at these key indicators, or you're looking at the demand in the system, or you're looking at demand for even financial service products, clearly we are seeing in the economy some sort of a pick up once again. So second quarter was probably the worst. We've seen the worst of the year. It's behind us, and now from now onwards we should be able to see higher growth and better margins for everyone.
Kiki sir, but this time there has been no revision with respect to the policy rates. But going ahead in the February meeting, how are you building on to the expectations of a rate cut there, and how much could be the rate cut, if any?
See, in my view, RBI is going to keep monitoring the data. Inflation numbers is obviously the single most important number they will keep watching. The core inflation is low, but the headline number is high, and obviously food inflation and vegetables and stuff like that have been very, very high. So RBI will keep looking at this data and then taking a decision on what kind of measure they will take in terms of policy rate cuts. In my personal opinion, the way things are looking now, I think a 0.25% cut in rates in February is a possibility, but I don't think it will be more than a quarter.
Also, let's talk about the rupee, because we've seen a sharp deterioration or depreciation in the rupee when you compare it to the dollar, though the RBI governor did highlight that sort of a depreciation was quite limited when you compare it with the EM peers. You also have a move that the central bank has now allowed the banks to increase interest rates that they offer to non-resident Indians. So in that way, that will also actually keep the rupee in check now, isn't it?
Absolutely. And I think if you look at the way the rupees performed, yes, the rupees lost a little bit of value in the last few days. But just look at the dollar strength in the rest of the world. The dollars, if you look at any other currency, any other emerging market currency, India has probably been one of the best in terms of the reduction or in terms of the depreciation against the rupee. To my mind, I don't think we've seen a depreciation of more than 2% when you look at a year-on-year basis. And historically, we've always been used to seeing a depreciation of 2.5% to 3% year-on-year, but over a period of time.
Keki sir, but this lowering of CRR is indeed a welcome step, and the experts also believe that this could provide modest NIM support of 2 to 3 basis points for the banking space and the large players out there. Any take on that how could this liquidity push help the NIMs of the banking majors?
It will definitely help the NIMs of the banks because when you effectively what it means is that the money which was earlier tied up with RBI and earned a very low return, that will now start earning a much higher return. So on money which was not getting any revenue or not getting any income, the banks will start earning income. Now, whether it will be a 2 basis points or a 3 basis points or a 5 basis points impact will depend on each bank, and it will depend on the size of the bank, and therefore what percentage this CRR reduction will lead to their, will give them more money to deploy at a higher rate.
With that, thank you so much for joining us on ET Now to talk about the RBI policy, the monetary policy, the moves coming in. Apart from the repo rate, we saw that huge cut coming in for the CRR, about 50 basis points. Thank you so much, Mr. Mistry, for joining us on the show to talk about that.
Thank you.
If you like this video, then like, share and subscribe to ET Now.